Welcome back to lesson number 20 of business accounting, and in this lesson we will look at the theoretical part of the recording of labor cost in the general ledger and general journal, and then also the general terminology that we will use when considering remuneration. When we are looking at labor cost, you will see the word or the term idle time. Now, what is meant by idle time? Some people will refer to it as waiting time. And this is really the period or the time that employees or machines are ready to work, but they are unproductive. The next term that we will look at is normal remuneration, and that is basically, or that is then in essence your basic salary or wage. This is now excluding overtime, allowances or anything else. This is the basic salary or wage. The next one is gross remuneration. This is your normal remuneration. You will remember normal remuneration was your basic pay and then plus overtime and allowances. So in other words, basic pay plus overtime and allowances equals then gross remuneration. Net remuneration is then your gross remuneration less deductions, and that will give you your take-home pay. So net remunerations is then the money that you will receive in your bank account after all your deductions. Allowances, some employers will pay their employees a normal salary or basic salary, and then also some allowances. Now these allowances can include a housing allowance. So on top of your basic salary you will receive more money in the form of an allowance, so that you can either rent a house or rent a flat or then buy property. Then you can also receive a traveling allowance where you can buy a vehicle or rent a vehicle, or then only to pay for the expenses on your vehicle that you already bought. It can also be in the form of subsidies, and then you can get a whole lot of more allowances. You can get an entertainment allowance, you can maybe get a cell phone allowance, so there's some more than only housing and traveling, but these are the ones that you will usually find in employment. Then another word is taxable income. And how do we calculate taxable income? We take the gross total income, in other words, all our income. That was the gross remuneration. And then we deduct all our deductions. You will remember in a previous lesson, we looked at the different deductions. Now you will deduct all the deductions and exemptions. Now these are not important for the syllabus, but just to give you an idea, sometimes the taxman is saying that you don't need to pay tax on certain types of income, and those are then known as exemptions. Now when you take your gross remuneration, less deductions and exemptions, you will have your taxable income. Now a taxable income, remember we said that normally you will have to pay income tax, and then you will, from your taxable income, you will deduct or calculate your tax payable, and when you deduct your tax payable, you will then have your take-home pay. Another term, labor recovery rate, and this is to determine the efficiency and the productivity of the workers. You will take your gross amount paid and then divide it by the total hours worked. Remember, gross amount paid is then before you deduct your deductions. This is only to give you then a summary of total labor cost. Total labor cost will consist of normal wages. There can be idle time. There can be an overtime premium. We did overtime premiums in the lesson that dealt with time-based pay, and then also some fringe benefits. Fringe benefits are these allowances then. Now then, normal wages is a direct labor, so that will be direct labor cost. And then idle time, overtime premium, and fringe benefits, all of these are then indirect cost or then manufacturing overheads. But you will remember that overtime premium, we said if it's for a specific order, then we can add it to the direct labor cost. But if it's only in general, the overtime was worked only in general, then it will be an indirect labor cost. Now, this is how to calculate gross and net wages, and this is now similar to a payslip, and I will take you through the steps. You will have your basic wage, that is normally then your basic pay. Now you will have to calculate it according to hours, or maybe this person worked on a fixed weekly or a fixed monthly rate or salary, then you don't need to calculate the hours. Then you will have overtime. Your overtime, you will have to see what is the rate for overtime. Usually overtime is 1.5 times, or then on a Sunday it's twice the rate of twice the normal rate. Then if you have any allowances, you will also add it, and if you add up all the income, you will get total gross earnings. Now you have one deduction, and that is normally your pension fund. Although there's other deductions also, you need to split the pension fund from the other deductions, because pension fund is usually a tax deductible expense. So directly after you calculate the total gross earnings, you will deduct your pension fund, and then you will have taxable income. Now you just deduct all the other deductions to get your net earnings or your net remuneration, and this is basically your take-home pay. Now this part of the calculation is to show you the employer's contribution. Normally you will find that the employer will contribute towards a medical aid fund, towards social security. This UIF is social security in Namibia, and they will also contribute towards the pension fund. Now in a separate calculation, we will then only calculate the employer's contribution and then also the employee's contribution. Now, if we look at the accounting entry, and here we have then the general ledger account. Remember, it looks like a T account. Now, we will have a payroll control account, and then we will have the sub-accounts underneath the payroll control account. Now, all the amounts in the sub-accounts should then be equal to the amount in the payroll control account. So we are saying the gross wages, remember, gross wages was the basic salary plus all your allowances. Your gross wages was 3,755. Remember, this is not the amount that the employee got in his bank account. He actually got the wages creditors control. In this case, or in this scenario, this creditor is then the employee. In his bank account, he received 3,105. The employer deducted the tax, which was 35510. They also deducted pension fund of 204, and this was actually the employee's contribution, but this was deducted then from the salary. And then the medical aid fund also, again, the employee's contribution of 90. Now remember, with pension fund and medical aid fund, usually the employer and the employee will both contribute to these funds then. If we look at this information, again we have in the payroll control account 354, and this was the employer contributions for pension fund and then a medical aid fund. Again, you will see the amounts in the sub-accounts will then be equal to the amount in the payroll control account. In the payroll control account, you will remember we had the gross wages and we had the employer contributions. Now, the payroll control account will then have to be transferred to work in process or work in progress, or then a production account, or to the overhead control account. So in an exercise, and then we will actually look at the exercise in the next video, then we will see what portion of these amounts are direct labor and which portion of these amounts is then indirect labor or overheads. So in this example, they told us that direct labor is 2190 and indirect is 1919. So now you will credit the payroll control account and then transfer it to your work in progress or your production account, and then also to your overhead account. You will remember then that when this work is then finished, you will transfer these amounts then to finished goods from where it will be sold. This is then some exercises on labor cost and how to record labor costs, and then also how to compute gross or net wages.